Did we just witness one of the most bullish catalysts ever seen for the crypto market? And more importantly, what does the removal of SAB 121 mean for all of us as traders and investors? In today's video, we take a look at the good, the bad, and the ugly when it comes to everything moving in the markets right now. And as we've long suspected, it looks like Wall Street has placed the trap and now started to buy heavily into one of the lead market sectors, semiconductors. With all-time highs being reached by the S&P 500, gold going absolutely bonkers, and also everybody's now eyes focused on the crypto markets, what exactly is going on? Let's break it all down together right now. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a jam-packed show because there are so many things to unpack, including some massive announcements over the last couple of hours. What do they mean for us as traders and investors, and how should we be dealing with them? Before we announce some of those and take a look at it, let's just quickly bring it back for a second here and say that if you're from Perth or Brisbane, Australia, or you can get to these locations, make sure you do in February. We're coming to town and it's going to be great to meet each and every one of you. We've got some great stuff to share. We've got some fantastic speakers and it's completely free. So make sure to sign up and see us in Perth and Brisbane if you're able to make it. February 25th and 26th, respectively. It's going to be good. All right, guys, well, let's get into the big news here, the SAB 121. Now, of course, everybody's talking about this, and it has many crypto maximalists very excited, especially on the Bitcoin side. Now, why is that? Well, basically, it allows banks to do some big things when it comes to Bitcoin. We've already seen the establishment of course, Bitcoin futures, and in many ways, this was the big thing for crypto markets. Basically, it allowed crypto to be legitimized and more people to be able to buy into it. The Bitcoin ETFs, as we've long argued, are a massive gain for Bitcoin overall. And then, of course, we saw the derivatives market getting opened. But now we're seeing banks being allowed to hold BTC as a reserve asset and potentially banks to be using Bitcoin as a backing for loans as collateral. Wow. Okay. So there's a lot to unpack here. Currently, less than 0.1% of banks have exposure to Bitcoin, but imagine what could happen if they start adding this to their reserves. So, of course, this has a lot of people excited about it, but you can probably see the issue that could also happen in the future. Imagine if we see huge loans going against an already volatile asset. Yeah, that could end kind of badly. Either way, it's big for now. And of course, we'll be looking for price action. But I'd be interested to see your comments down below. Do you think this is a net positive? Is this going to lead into some dodgy lending and some weird debt in the future? And of course, potentially a bit of a crisis period? Let us know in the comments down below. Some other big announcements before we go over some of the charts and how they're reacting to this news is, of course, Tesla. Tesla announcing their new Model Y, their most popular car. Most of you seem to have lukewarm reactions to this, but they are including FSD now in the long range at 60K, and it looks like they're trying to make it a little bit more futuristic in look. It doesn't seem like many people like it, though. Do you guys like the new look of the Model Y? You can see here the kind of new sketches of what it's going to be. But in general, I would say from most polls I've seen, most people seem to think it's ugly. What do you think in the comments? Don't see it, though, as a big catalyst for the stock price. As we know, the stock price already traded to one standard deviation above average, and that was when it got close to 500. So at the moment, it's in consolidation phase. Now, let's speak about consolidation and, of course, what could be up and coming in this post-election year. If it follows a similar seasonal pattern to previous years, then Q1 could be very serious. And usually it starts in February. You can see here, generally markets tend to have a big pullback in February and usually ramp into that period of time. Does that sound familiar? We've dropped in the start of Jan, which is not unexpected. We've then rallied to a new all-time high at the time of this recording. Could we go a little bit higher? Absolutely. We're in positive gamma, which we'll talk about soon. And then will we have a pullback later on? Well, based on at least historical studies, you would have to think that is certainly possible. And even based on charts such as this, which is, of course, what's happening at the moment post a Fed rate cut, we could also be looking at something similar. Why? Because if we follow, let's say, any of these ones, the growth scare, or even the normalization, or even the recession, which of course it doesn't look like we're following that right now, you'll notice that up and coming Feb March, we're seeming to look at these little pullback kind of periods. Sideways on the green, pullback on the recession one, and growth scare also seems to have some dips around this point. I find that very, very interesting indeed. And of course, we'll need to follow it along. But generally speaking, as you guys know, we look at the options market, the dark pools, and more importantly, the price action itself. Right now, what is the market doing? It's kicking ass. I mean, frankly, we're seeing forward earnings expectations continuing to blast higher. And as we've already shared before, you guys know that when we're seeing this type of read, and yes, this is taken from a little while ago, basically this is making people very bullish on the future. The markets trade 12 to 18 months in the future, and whatever's looking like on here, it's getting better based on Netflix, TSM, and obviously the banks and all companies that have reported so far. If we take a look at valuations and earnings, we are in that period of time where markets look to PE and EPS as the main growth catalyst. And of course, this eventually does end, and it ends in usually sideways to even defensive markets. But for now, the PE and the EPS is improving. So of course, that's why each and every earnings season this year is going to matter. Make sure if you haven't already, subscribe down below because guys, this is serious business. We're in the last third here of this current cycling period. And as you guys know, this is where it makes a big difference to also pick the asset classes you're going to be needing to look at. You can see here if we hit this 80, which it seems like we're certainly going to, which is most companies are looking at forward earnings improvement, then guess what? We could be looking at a significant period of time where also it does tend to end kind of badly. So this is that point where you need to be absolutely uber, on top of things in 2025. In terms of weekly highlights, these are the earnings still coming out over the next 24 hours. And as always, we'll need to be on top of those next week because we've got some big tech coming our way. What about the Russell 2000? Is this still an opportunity? We'll look at the charts later on in today's video, but generally we've already shared this stat before. And this was, of course, taken near the low. It made us quite bullish on the Russell. So far, the Russell is back up around here. It's seen some wicks and some nice rejections off them. And if we continue to see a stimulatory type of environment, then of course that is probably going to lead into some pretty nice stuff here in the Russell. In terms of pre-orders ahead of tariffs, we saw obviously a huge amount of American companies going wild on buying stuff. And this could lead into manufacturing, of course, in the US. So in general, a lot of people are feeling bullish, including Bank of America. What are the problems? Well, one of the big issues is probably the temporary weakness we could see right here, right now that we've hit 6,100. Effectively, if you look at the McClellan oscillator, it's gone from a super low point to a super high point really quickly. When that happens, you often do get a little bit of a period of weakness over the next week where it just goes sideways to maybe even slightly down. That's kind of like a mini dip. And then usually it rips higher again. You can see here the stats are very bullish when you pull it out 6, 9, 12 months. What about the US dollar? Well, that certainly is coming under fire right now. It certainly seems like it was a buy the rumor, sell the fact. Big moves on the euro over the last 24 hours. We'll check it out soon. But remember, when we got this news around 2 weeks ago, it was really leading into gold doing well and potentially the dollar being stunted. And so far, what have we seen? Gold is doing well. And if gold continues to do well, imagine if it's like this chart again. Wow. We think gold's going to 3,000 this year. And of course, we've been saying that now for quite some time, and it still looks pretty good. Speaking of other markets outside of the US stocks, of course, we've also got China ETFs getting absolutely hammered in short interest. We're not quite at the absolute extreme of short interest, but remember, people have been wiped out shorting a few times already. And when we saw this last time, it made us kind of more bullish because when everybody's trying to go short on something, you probably want to be looking more at the long end. And so far, the market has held that key level that we've been watching. So we'll check that out soon. What about Bitcoin ETFs and Ethereum ETFs? Do they continue to see inflows post-inauguration? Well, the answer is quite simply yes. Big numbers here coming in for ETH, actually. So Ethereum doing very nicely as it holds a very strong base, and we'll talk about that. And of course, 7-day net inflow into Bitcoin ahead of this announcement, 2.76 billion in net inflows. So really, the crypto world is seeing some large buys. What about take profits? Has anyone been taking profit? We did see TQQQ yesterday, potentially, maybe it was a buy. We'll see. They often are a bit early. a big trade coming through right near the highs. And now we've seen one here from the S&P 500 quality ETF, the largest transaction done in years. And it's a big, big one. Is this a take profit? I'll let you guys kind of answer that question. I'm not too sure, but again, it is happening right at the highs. Generally, we've seen when we get these big transactions, we kind of see a little bit of sideways. This one was obviously bullish. This one was sideways into bullish. What is this one? Is this a take profit? Is this a sell? Time will tell. Something we do need to be paying attention to. So what do we think on the charts? What have you guys been messaging me about, and what are we seeing? Well, it continues to be pretty much just bullish, but you've got to remember we are now leaving behind a lot of gaps. Look at all these gaps that are being left behind. Now, this is going to be important because generally gaps do get filled. I mean, not all do, but certainly when you have this many, eventually the markets usually pull back. Now, of course, we're quite bullish on what we've been seeing so far, so we're not really thinking, well, this is going to be absolutely horrendous double top or anything like that. That's not been the way. A lot of people are caught offside here trying to short this market, and I don't think that's the best way of doing things. And I'm pretty sure a lot of you guys don't either at this stage. However, the gaps are interesting, and it opens up the idea that maybe markets could even come back down to a 59.50 in the future, and that would be probably an area where you're going to have a lot of confluence. The trend line, some of the gaps being filled, a million moving averages, anchored VWAPs, all sorts of fibs and everything kind of sitting there. So if that did happen, do we think buyers would step in? Yeah, probably. Here are the new options high and low levels. We've obviously got 6100 call level being absolutely hit. And this is, of course, this huge call wall that we've been talking about. If the markets don't like what they see here and we end up pulling back, this could be, a very feasible thing. For now, though, it does seem like the market's just continuously closing on its highs and there's no stopping it in front of all of these major announcements. Now, why is there no stopping it? Well, it's positive gamma. Even though 6100 is a call wall, we keep pushing through it. And have a look here. The more we push up in price action, the more the street has to cover those positions. And of course, it leads on to that flowing effect that we saw a lot in 2024. We're still seeing about 5950, 5900 being the main kind of put walls. Obviously not putting any pressure on those right now. And 6200 is the target if we keep pushing up here. So 6200 is the pretty clear next call zone as we are pushing through. So for now, I think most people are looking at 6200. But if we do see weakness, 5950 is not out of the question. Fill a couple of those gaps, come down to a key level. What about when we're looking at things like Nvidia? Absolute positive gamma right now. 148, 150 has been a real hindrance to Nvidia. Getting upgraded by many companies. Obviously, this new $100 billion plus, the Project Stargate. Maybe we have to go watch Stargate again. Which was your favorite, by the way? Atlantis, SG1. Maybe you haven't even watched it before. Either way, we could be going into one of those Stargates in the future. And we're seeing here that 148, 150 zone. So this is a big level. And if it gets through here, it could go ballistic. So just remember this. This is a very important level for Nvidia. And it's along the lines of what we've been mentioning recently. We've seen flows into those semis, and it happened about 3-4 weeks ago. So it's not news to us, to any of you guys that are watching out there. We know we've seen these big dark pools come through, and now we know their intentions. They were sneaking it through. Pelosi was getting into a couple of things while she was at it as well. Now, let's go over to Tesla. Wow, what a mess of options everywhere. Okay, we're pretty neutral on this at the moment, 412. Obviously, yes, 450 is the possibility upside for now. And of course, 380 and 400 is where most people are seeing kind of the support. So really sideways, even into these announcements about the Model Y. What about the bonds market? The bonds market is looking good. It's down. Basically, what we're looking at here is whether the bonds market's freaking out. And as we reported back earlier on, we kind of felt like they weren't freaking out anymore. And that's been proven correct so far. So well done, guys. What about high yield corp bonds? Well, they're kind of moving up as well, but that's good because in this case, high yield corp bonds are in demand. People are not freaking out. Financials are running, KRE is running, and the dollar is weakening. Now, this is not necessarily a bad thing. This could be good for the Chinese market, HSI. It's already going ballistic right now today, up 2% more. And the US dollar seems to be weakening. I think the key here, though, is we've got this alert set, but it's actually the euro. The euro is breaking through significant stuff. And this to me looks quite bullish. I think we could be going here to 105.95 or 106. And yeah, things are looking good. So again, counter to what a lot of people believe out there. Buy the rumor, tariff, 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 tariff. All of a sudden, dollar's going down. Well, that seems pretty similar to the first Trump presidency in many ways. Yet people didn't seem to see it at that point. Let's move over here to gold. Wow. All-time high? What do you guys think? Let it go. Yeah, big move here. Consistent uptrend. Obviously, every time it's ripped down so far being bought. You can't guarantee that. Of course, the market could absolutely get smashed straight away. But the thing is that right now it looks pretty good. And it's pulled back in time since September. So a lot of people have been sleeping on gold, but it looks like it's finally coming through. Silver, always the horror, not moving as much, but we're looking at that 31.15 to be broken so that we can see that one pick back up. And as we suspected, oil has continued to weaken. Trump coming out basically saying, we want to lower all the rates on all the prices. I don't know what's going to happen there. Let's just look at the price action. Pretty much, I could see it still buying off this level. So remember, let's ignore the news and whatever. Let's just follow what the big guys are doing. And in this case, we're looking for this demand zone. So we'll see how this trades very soon. And of course, 73.50 will be a key level for oil. So we're going to continue to watch that. You may be a bit scared of that one, though, because there's going to be so much news each way during the next couple of weeks, I can imagine. Tesla, nothing much going on here, as we kind of always think. 450, 400, 380 on the buy. Pretty much it's sideways. Apple, very interesting point for Apple. Earnings announcement coming very soon. This one, I think, will be a blockbuster. A lot of people downgrading Apple at this stage. What about semiconductors? Semiconductors held above 261 again. This is big. It's breaking up. That is a very good news. And of course, we've seen some other semis start to do a little bit better. In general, Nvidia has trying to push that 148, 150. And as you guys know, if we're able to break through there, we're killing the Wyckoff statement. Because a lot of people are sending me this saying, Tom, it's a Wyckoff. It's going to die. It's horrible. Yeah, if that happened, it would be quite negative for markets. So certainly one of the most important charts, which is something we've argued for a while. When we move over to HSI, things look good. They're basically looking like we're going to break 20,200 into Chinese New Year. Obviously, dollar down, often HSI up. And US 2K starting to put in a little bit of work here, trying to play some catch up. So it's already done good percentage if you look at raw percentage, but of course it dropped a lot. NASDAQ broken through here, going towards new high. We'll see. Looks pretty good, but it is starting to get exhausted in terms of the days up. I think a lot of people are going to get sucked into FOMO around here, and that's why you may see a dip moving forward, but I don't think it'll be a huge dip. If we go over to the crypto markets, Solana's doing nothing off any of these announcements. Ethereum went up, actually a decent amount, and then it's dropped back off. And I think this is one of those ones where people see it as incredibly bullish, and don't get me wrong, I think it is a bullish signal. However, you're just not seeing it in the price action yet. So it can trap people, and then people lose faith in that. They say, oh, it should have been bullish. They left scratching their heads saying, what's going on? Remember, it's all about price and all about reacting to price breaking key zones. 3450, 3500 is a huge deal for Ethereum, and it's also a big deal it holds this level. It's been pretty horrendous, frankly. So let's see whether Ethereum can come through. A lot of people saying it's dead coin and this and that. I never really pay attention to that, and I don't think you guys do either. The main thing is that we look for the price action. At this stage, it's holding that 3,200 firm, and we'd like to see it obviously break 3,450, 3,500. Now, on to what's going on here with Bitcoin. So again, most people would say, well, this is super bullish. Shouldn't we see it break through? Yeah, I mean, you might see it as bullish, but the keys here are probably hold 96 plus. Obviously, 100 is a huge buy area. We've seen that before where we've had buyers come through. We are currently in the possibility of a Wyckoff towards the downside, which is obviously most bears kind of case here. They're saying this is a UTAD and it's ready to go down. I think it's too early to call that. I'd always say this was a sweep. The market is still going up, and this could actually be consolidation into demand. So I would probably go with the trend is still up. This is not necessarily, it's no negativity, I don't think, in terms of the markets for now. But I am really interested to read your comments on what you think about the whole banks lending debt on Bitcoin idea. I really think that's going to be a very interesting one in the future. Flash PMI coming out Friday, 9:45. a.m. Obviously, Bank of Japan stuff coming out right now at the time of this recording. We'll see how that plays out. And as always, guys, if you enjoyed today's video, then please remember to subscribe and smash that like button. Also, if you're from Perth or Brisbane, come out and say hello. It's completely free to do it. It's going to be an amazing night. It's going to be really fun to interact and see all you guys. And these events that we love putting on. And you know what? You're getting some extra little tidbits that I'm going to share in those. So if you're able to, make sure to do it. Check us out on X. And I guess the summary of today's video is obviously we're seeing the Trump administration bring out some pretty bullish stuff in terms of the numbers. This is not really a surprise. I still expect corporate tax to come through and those cuts to be obviously the big discussion moving forward. That's going to add a certain amount to the PE ratios and really take us through hopefully that last third of the market. Is it problematic? There could be some issues. I mean, we've seen first years usually of new presidents end up being kind of sells in Feb into March. And if it follows that similar path, we'll see it in the price action. Thanks so much for watching, guys. We'll see you in the next one. Bye for now.